Hello and welcome to another Business New Zealand update. I'm Grant Walker with CEO Kirk. Well, quite a few things to talk about today. We're going to start with, of course, the minimum wage increase from $18.90 to $20 an hour. Research by ACT shows the annual impact on business with 20 workers of 4 minimum wage hikes, more sick leave and an extra public holiday, almost $200,000.
Yeah, it's pretty significant when you pile on all of the additional regulation that small businesses particularly are going to be facing over the next little while. I mean, it started with the minimum wage. So the minimum wage has gone up 25% in 3 years, which again, if you've got to find that money, is pretty difficult. There's a couple of other things going on as well. There are regions around New Zealand that have shortages of labour, so the minimum wage will have very little impact there. It's really about the labour supply. The problem for those businesses is they've got demand for their goods and services, they can't get the labour supply, and they're willing to pay for it. In other areas where businesses are finding where they're a lot harder hit, particularly in the tourism areas, that there's simply no work for the workers, whatever the minimum wage rate is. So there's a couple of different things going on at the moment.
So what do you say to those that say these low-income workers will spend the money so it comes back to the business anyway?
Well, they've got to have businesses to hire them. That's the first point that I'd make. We're already hearing about situations where the minimum wage has gone up. People's hours may be cut because the businesses have got to figure out a way to pay for some of this stuff. In fact, not some of it, all of it. So they've got, as you alluded to, they've got increases in sick leave, increases in sick leave that relates to domestic violence leave, miscarriage leave. You've got things like fair pay agreements sitting in the background as well. So if you're a small business owner right at the moment, you're probably feeling under quite a lot of stress. And in fact, Spark released a survey yesterday which showed that 2/3 of small business owners were experiencing high amounts of stress.
All right, well, let's talk about stress. Landlords probably under a little bit of stress because the housing announcement last week, 2 big changes, ending the Bright Line test, well, moving it to 10 years, but ending the interest deductibility for property investors on existing homes, not on new homes. So you made your point fairly clear, not the best from your point of view?
Well, I don't think it was the best way to make policy. I think if you think about the Bright Line test, that's been pretty well signalled. In terms of the removing deductibility, that's a pretty significant change. And our concern is actually, okay, you remove it from investment properties that are existing properties. Where do you stop? In terms of the principles of deductibility, it's a legitimate business expense. It's not. I didn't like the way that the government characterised it as a loophole. It's a legitimate business expense in creating income. Now, naturally, if you're representing businesses, you're going to be looking at the way that particular policy was made and go, okay, that's not the best possible way to do it. Big changes like that need to be signalled well in advance and have a really decent discussion, because there will be unintended, I hate the term unintended consequences, but there will be.
That's probably with rents going up according to a lot, but of course not according to Grant Robertson. He is saying now that he's going to keep an eye on rent increases, and of course that brings in possible rent freeze caps or price cap freezes. So the problem there is these announcements that may or may not come. How nervous is business about the fact they just don't know what's coming?
Well, I mean, if you're a property investor right now, even if you're wanting to invest in new builds, you may be pausing until you know exactly what the rules are. And
Some already have.
And that may be sometime, yeah, that's exactly right. That may be sometime down the track. I mean, I think on the plus side, because those things are really about driving demand down. We've always said, increase supply, you won't have to do all these demand side measures. And the Reserve Bank have got a range of so-called demand side measures like the loan to value ratio restrictions, possibly debt to income measures that they would put in.
Well, if they bring those measures in, who can afford anything?
Well, I think what you need to be thinking about, and what the Reserve Bank, for example, could be thinking about, is how they could utilise bank capital rules to enable supply to come on stream more quickly, and that's in the new build area. I mean, if you're building properties, it's not the easiest thing to do. You require more equity when you're buying land, and then you've got a range of rules that relate to the release of funding for building. So my view is that there's still a lot of work to do on the supply side that hasn't yet been done.
But when you talk about new builds, of course, it looks like they're going to cost more because you've got the Carter's announcement that came with timber. There's going to be less of it around. You've got shipping problems or being held up. You've got a lot of goods you need for new builds in there. You've got claims that new builds are going to go up in price. So how do you increase supply if you got those kind of delays or increased costs?
Well, and it does speak of a larger issue, and that is in supply chains for New Zealand, for goods that are coming into New Zealand. I think there are some real challenges that we're facing at the moment in a range of areas beyond just building supplies that could in the medium term be inflationary. Because there's still strong demand, and I think you'll certainly see some of that play out in house supply markets.
And also banks, one bank this week suggesting that interest rates could go up by the middle of next year.
Yeah, again, because there's significant inflationary pressure. I mean, it was an interesting situation last week when the government announced that they were removing interest deductibility for investment properties. The dollar went down, and it went down on the basis that the markets were pricing interest rates lower for longer. But those supply chain issues are starting to really, really bite in terms of just getting goods into New Zealand.
All right, let's change the subject. Where are we on vaccines at the moment?
Well, a really good question. I mean, I think we're a long way from where we need to be. The government have said that by the end of the year that they will look to have vaccinated the population to herd immunity. That's good. I think it'd be useful to see. We've seen a bit of the roadmap. It's important that New Zealand doesn't get behind other countries, I think, in the vaccination program. If the world opens up more quickly than we do because their populations are vaccinated, I think we would have lost an opportunity that we've had and that we've gotten by the sacrifices that we made to eliminate COVID, if you like. So I think it's really important to make sure that vaccine is deployed as quickly as possible.
Well, in the coming week, the Prime Minister expected to announce the TransTasman bubble date. What are your hopes there?
It'd be good news if that was announced. Even the roadmap to getting the bubble opened. I don't think it'll be. I think the government have indicated it's easier to do it on a state-by-state basis, and if you look at what's going on in Brisbane, that would certainly appear to be the case. It provides some hope, I think, for businesses in hard-hit areas like the West Coast and Queenstown and so on and so forth. I guess the challenge will be for travellers going both ways. The risk of getting stuck in New Zealand or in Australia is always there until we get herd immunity. So, that just it just means that getting the population vaccinated as quickly as possible is the most important route to reopening the borders.
Well, finally, I want to end with your response to the Climate Change Commission's first package of draft advice to the government. Your key takeaway?
Comprehensive piece of work by the Commission. They did a lot of consultation over the preceding months before providing the draft advice. It is draft advice, so that's good. Hopefully they'll take into consideration some of the things that we and other business organisations said, which was certainly focus on the ETS as the primary mechanism for managing emissions and pricing them, and that will change behaviours in an appropriate way. Also focus on net zero. That's going to be important for our energy-intensive trade-exposed businesses. We don't want to lose industries because of a focus on gross emissions, and then have to import emissions from other economies. So I think I think there's still a fair amount of work to do and engagement with the Commission, but as I say, it's a comprehensive piece of work. Never easy. These are challenging questions. So you've got to admire their commitment to doing the work properly. I think one of the other areas we need to see is some of the assumptions that underpin some of their modelling. I think that's going to be important for them to be transparent as we get further down into this process.
All right, well, certainly hope you have a good Easter. I certainly hope that businesses have an enjoyable and profitable Easter.